Welcome back everyone, and in this video, we are going to discuss the two dividend stocks that I just bought in my financial freedom portfolio. And if you're new to the channel, I'm building a portfolio of blue chip dividend stocks that pay me passive income every single quarter. And my portfolio now has a value of over $85,000. And I'm a long-term investor, and over the next few decades, I plan to consistently grow this account so that one day I can achieve true financial freedom. And recently, I have made two purchases for this portfolio. I started a position in a new company and I bought the dip and added to an existing holding. And if we take a look at my portfolio stats, with the current market value of over $85,000, this portfolio provides me just over $2,000 in annual dividend income. So every single year, if I don't sell any of my stocks and I don't see any dividend cuts, my portfolio is going to generate $2,000 in passive income. And because I invest in strong dividend growth companies, that annual income is expected to grow at over 7% per year going forward. And the actual dividend yield on my portfolio sits at 2.36%, and overall, my dividend safety is very high. 89% of my income is likely safe, and 11% is considered borderline. And now, before we take a look at the first new company I bought for this portfolio, I'm going to ask you to please hit that like button and subscribe. I am the Gen Z investor, and every single day we talk about the stock market, going over different stocks you can buy in any major market news. So please hit that like button and subscribe to the channel. And the first stock that I added a new position for this portfolio is ticker TSM, Taiwan Semiconductor Company. They currently trade for $136 and have seen tremendous growth over the past 12 months, growing by 150% overall. And I decided to start a position in this company because I was looking for greater exposure to the semiconductor space, and TSM is a leader, and I still believe they have a ton of future growth ahead. And over 2020, the entire semiconductor saw a massive growth in sales. The entire global market grew 6.5% year over year, and that growth has no sign of slowing down anytime soon. And right now I decided to pull the trigger on TSM because they're trading at their estimated fair value. Right now, Morningstar has the fair value per share at $133, and I got in at just around $134. So to buy a very strong company with solid fundamentals and a lot of growth at a fair price is a great addition to my portfolio. And with the market trading at record highs, there are a ton of overvalued companies at these current prices. And when comparing different alternatives, I thought TSM offered a ton of value with lots of future expected growth. And now if we take a look at the financial stats for this company, they have been performing extremely well. And if we take a look at some key highlights, since 1994, they have delivered over 17% annual revenue growth. So for more than 20 consecutive years, they continue to maintain extremely high total revenue expansion each and every year. And going forward, they predict to continue to grow that revenue between 10 and 15% per year, all the way up to 2025, while maintaining extremely high operating margins of close to 40% and providing a return on equity above 20% overall. And TSM has an extremely strong balance sheet. And if you're subscribed to the channel, you know that I love to invest in companies with a very strong financial position, and I believe TSM is a leader in their industry with regard to balance sheet financials. And if we take a look, they have only relied on internally generated funds to finance their organic growth. And with this company, they are also very committed to their dividend and growing it each and every year. They started paying their cash dividend back in 2004 and have never reduced it over the past 17 years, and they have a strong commitment to continue to reward investors with that cash dividend each and every year going forward. And if we take a look at their full year 2020 stats, they performed extremely well. Their net revenue in US dollars grew 31% year over year, even throughout a global pandemic. Their operating free cash flow grew 33%, and their free cash flow was up 103% year over year, which is absolutely incredible. And the company's return on equity over the trailing 12 months is at just under 30% overall. So some massive expansion over 2020 for TSM that I believe will continue to grow for many years in the future. And if we take a look, over the past 4 quarters, they have beaten EPS expectations each and every time, And going forward throughout 2021, we have high expectations for their EPS numbers to continue to climb even higher. And if we take a look at their income statement, each and every year, their total revenue continues to expand by a significant amount. And from 2019 to 2020, we've seen a massive spike in their total revenue from 35 billion all the way up to over 47. And we can see the long-term trend is going in the right direction. And if we take a look at their bottom line or their net income, each and every year, it continues to grow as well with a nice uptick in the trailing 12 months. And overall, they've brought in over $18 billion in total net income over the 2020 fiscal year. And now if we move into the balance sheet, this is where I truly fell in love with this company. If we take a look at the numbers, their total current assets come in at $38.8 billion. And compare that to their short-term debt, that comes in at around $22 billion. So they have a current ratio well above 1 and extremely safe over the short term. And what I find really impressive is that total current assets of close to $39 billion is well above all of the debt on the entire balance sheet that comes in at around $32 billion. So their $38 billion of total current assets available in the next 12 months can wipe out all of the debt on the entire balance sheet for this company. And overall, TSM has close to $100 billion of total assets on the balance sheet, and they continue to grow that asset amount each and every year, which is a very strong sign. And if we take a look at the equity portion, we can see over the long term, total equity in this company continues to grow, showing a great consecutive year-over-year increase. So a very, very strong balance sheet from TSM, and I actually believe they have one of the strongest balance sheets in the semiconductor space. And going forward, if we take a look at an analyst report, the company is rated as a buy, and their annual revenue in 2021 is expected to grow by over 20%. And for the next 5 years in the future, analysts are forecasting close to 25% per year growth from this company. So I think there's still a ton of upside, even for a name that has run up so much over the past year. I think they can continue to climb even higher. The semiconductor space is only going to grow in demand, and this company's a leader, a fantastic balance sheet, continuous revenue growth, some strong products, and very strong management. I am a big fan of TSM. I started a new position in my portfolio, and I purchased 10 shares of this stock with an average price of $136. So right now, I own two big semiconductor plays in Broadcom and Taiwan Semi. And now if we take a look at the second purchase that I made for this portfolio, I added to an existing position. And the company that I bought more shares of was Pepsi. I'm a huge bull on this consumer company, and I think they will continue to be around for many decades in the future. They trade under ticker PEP for around $132 per share, and they have a market value of $185 billion and trading with a forward PE just above 22. And the current dividend yield on this company just reached above 3% at this current level. And over the past year, the company's share price is down just over 8%. But if we take a closer look at the most recent trading activity, we can see Pepsi hit a high of $148 at year-end 2020. But to start out this calendar year, we can see continuous decline in the share price, and they now sit down close to 10.5% over the start of 2021. I think Pepsi is still a strong brand, and the company fundamentals have not changed, so I decided to pull the trigger and buy the dip, and this is now one of the largest holdings in my personal portfolio. I bought 10 more shares, and right now, they make up the third largest company by market value in this portfolio with around 6.1% of the overall weight, and my position is now worth over $5,000. And I believe Pepsi is one of the strongest and most diversified consumer brands on the planet. If we take a look, under the Pepsi umbrella, they own 23 billion-dollar brands or 23 different companies that generated $1 billion plus in annual sales in 2020. And Pepsi products are sold in over 200 countries all around the world, and they generated above $70 billion in net revenue in 2020 and operating profit above $10 billion. And if we take a look, these top brands are recognized all across North America, and you can find them in almost every grocery store or convenience store all across the country, which is extremely impressive. And what I really like about Pepsi is they have a balanced mix of product categories. 55% of their portfolio is in snack food and 45% comes from the beverages. So right now, that's incredibly important. When people think about Pepsi, they really only focus on the beverage aspect of their business. But 55% of it is this massive combination of different snack food brands that they currently own. And if we take a look, they continue to grow organically each and every year, and they're averaging over 4% over the past 7 to 8 years, and their long-term target is to maintain between 4 to 6% annual organic growth, which would be great from this long-term dividend play. And if we take a look at their dividend history, it has been absolutely incredible. Their current dividend growth streak is at 49 consecutive years. So through good times, bad times, through every recession and depression we've seen over the last half century, not only has Pepsi paid out a dividend, but they continue to grow that income each and every year for investors, just showing how resilient and how strong this company really is. And taking a look, with a current average yield of about 3%, your annual income is growing at around a 9% CAGR over the past 8 years, which is absolutely incredible. So a nice average yield of 3% starting out, and that income will continue to grow for many years in the future. And taking a look at their dividend scorecard, that 3% current yield only makes up around 68% of the company's net income, giving them a ton of room to continue to grow that payment for many years into the future while reinvesting back in the business. And if we take a look over the past 4 quarters, the company continues to post earnings per share beats, and going forward throughout 2021, those earnings are expected to grow by a consistent rate quarter over quarter. And if we take a look at the analyst expectations, over the next 5 years, we're expecting around 8% growth from Pepsi, which is on the slow side, but I will gladly take that 8% growth plus my 3% dividend and sit very well owning one of the strongest brands on the market. And right now, the company is considered a buy, and at the price of $132 per share, they sit well below the 12-month price target of $152. So over the next 12 months, we're expecting a ton of upside in Pepsi shares going forward. And taking a look at the analyst report, 13% growth in share price over the next 12 months, and the company is considered a buy. 5 strong buys, 7 buys, 9 holds, and only 1 sell. And like we saw, annual revenue is projected to grow at a significant rate year over year. Close to 7% growth in 2021, up 11% by year end 2022. So overall, there's so many good things I can say about Pepsi. One of the best globally diversified brands in the consumer space, well known throughout North America and European countries, and I think this is a company that's only going to continue to grow over the long term. I'm not expecting any massive share price appreciation, but this is for the consistency. That nice dividend income that I believe will continue to grow at an average between 5 to 10% over the long term, the consistent share price growth, which may be slow, but it will be steady over the long term. And I think this company is a great hold, and I love to buy the dip, especially when it drops around 10% in only a 6-week span. So that's kind of my philosophy to why I added to Pepsi, now the 3rd largest holding in my portfolio, and I love this blue chip dividend payer. So thank you for watching, everyone. We did a quick recap on my overall portfolio, and I went over the 2 stocks that I just bought over the past few weeks. I started a new position in TSM, and of course I added to my existing Pepsi position. So thank you for watching to the end. I am the Gen Z Investor. Every single day we talk about the stock market, so please hit that like button, subscribe to the channel for daily videos, and I will see you in tomorrow's episode.